Oil prices are set to skyrocket after the midterm elections. Here's why. There are two major reasons for that. One, because of OPEC. Two, it's due to our current administration who's releasing oil from our strategic petroleum reserve. I want to give you straight facts on what's going on. A lot of people are expecting gasoline prices to reduce, but that's not what's going to happen, at least not for the next 12 to 18 months. I know that's not what you want to hear, but that's what's happening. OPEC Plus announced that they're going to cut oil production by 2 million barrels a day, which is a significant amount of oil. To put things in perspective, the world uses approximately 100 million barrels of oil a day. If you're going to reduce 2 million barrels a day, which will add more demand to the current levels. This information is coming directly from the Energy Information Administration, which is from our governments, so ultimately oil consumption is going up, and based on Economics 101, which is supply and demand, and cutting production by 2 million barrels a day will make prices will react accordingly. Prices of oil per barrel peaked around 120. Earlier this year, it fell below 80 a barrel because of the fear of global recession. However, the price of oil is going back up because of the OPEC Plus news. But here's the major problem we have. Our current administration, the Democrats who control the House, Senate, and the presidency, the Democrats want to lower oil prices as much as they can leading up to the midterm elections. The midterm elections are coming up on November 8th. The current administration is trying to hold the economy for the next 3 weeks. This includes the Fed as well. After the midterm election, don't be surprised if the gas prices skyrocket and if there's a financial disaster. This includes the stock market, the crypto market, the housing market, overall economy in general. So if something goes wrong, then Democrats will be blamed. The Democrats who are in charge, they need to keep the voters happy till November 8th. High gas prices make the voters very unhappy. The current administration knows this. 5 months ago, from our Strategic Petroleum Reserve, they started to release the oil. The sole purpose of doing this was to lower gas prices to keep voters happy until the midterm elections. We've been releasing a little above 1 million barrels of oil a day, and will continue to do so until October 31st, which is just 8 days prior to the midterm elections. America uses about 20 million barrels of oil a day, so 1 million barrels of oil a day taken from our reserves, that's a significant amount. Also, we're currently producing 12 million barrels per day, so 1 million barrels of oil from our Strategic Petroleum Reserve is good enough to manipulate the economics of our oil market. The Strategic Petroleum Reserve, which is supposed to be used in emergencies such as natural disasters or other kind of emergencies, but our current administration is using it for their own benefits. For your reference, Alaska produces 500,000 barrels of oil per day. So the emergency release is currently helping to reduce the prices of the gas. However, this is only temporary. The important thing you need to keep in mind is we need to refill our Strategic Petroleum Reserve eventually, and the current administration will probably refill it after the midterm elections. And think about it. What'll happen once we start to refill the petroleum reserve? This will create more demand and the oil prices will go up. The first purchase order is to purchase 60 million barrels of oil at the end of this year. So after the midterm election, and don't be surprised if the oil prices go up. When you release oil, it reduces the demand and the prices go down. And when you do the opposite and buy more oil, this will create more demand and the prices go up. This is how it works. Goldman Sachs is predicting the oil prices will go to $125 per barrel by the end of the year. For your reference, the current oil price is a little under $80. So all I'm saying is be prepared for the high gasoline prices after the midterm elections. Let's have a look at this. How much oil was in America's emergency reserve when Biden took office? And look at what levels are at today. We're going to continue dropping for the next couple of weeks as we're taking oil out of our emergency reserves, and it's been helping to reduce the price of gasoline. Here's the funny part. President Biden says that America will refill the emergency reserves after 2023. So that means we're going to refill in 2024 or in 2025, which is when he's no longer president. Isn't that funny? So we've been seeing an artificial suppression of oil prices and gasoline prices because the Biden administration, they've been bleeding dry our emergency reserve so that it was supposed to stop on October 31st, but current administration said last week They're going to release another 10 million barrels of oil in November. So that's going to be another 10 days regarding the OPEC Plus production cuts. This news is driving up oil prices. OPEC Plus, they're not going to change their mind, at least not until December 4th at a minimum, so that's going to be after the midterm elections. You need to know that the current administration was begging OPEC Plus not to go through with the production cuts, and the Biden administration gave an offer to OPEC Plus that if they don't make the cut, we'll buy their oil to refill our strategic petroleum reserve up to 200 million barrels. But OPEC Plus told the Biden administration, no deal. Analysts estimate U.S. gas prices will go up by 15 to 30 cents a gallon. But you have to remember, that's just an estimate. The price of oil has been so volatile. So if oil rips back up to the $120 a barrel, then you can expect much more than the 30-cent estimate. That's not going to even be close. Additionally, and most of you already know this, the gasoline prices that you're going to see, it's going to be states or region specific. Currently, the national average is a little under $4 a gallon, but places like California, it's at $6.42 a gallon. Remember, that's just the average that you're seeing in California. The gasoline in California is more expensive because of their blend of fuel. Additionally, the refineries in the West, they're either undergoing maintenance right now or they're experiencing problems. This is causing higher gasoline prices all over the West Coast. I'll keep you updated regarding the OPEC Plus meetings on December 4th. This meeting will be going to affect gasoline prices. It's going to affect diesel fuel prices. It's going to affect inflation. So don't be shocked if you see gasoline prices back skyrocket soon. Please subscribe. Thanks for watching. Until next time.